Hi, and thanks for joining us for another video at Street Smart Options. I'm Jim Bunker, and I'm here with Jonathan Sherman. Tonight, we're going to be talking about options trading basics. And folks, many times people, take a look at what we're doing, and we get comments that, they think that options trading can be very, very complicated and something that, not just everyone can do. And that's just not true. We have the ability to teach everyone from the basic trader all the way through the advanced trader, how to utilize our system to make profit and take profit through that cycle that we talk about when we talk about the ability to trade during the cycle. So having said that, I'm going to turn it over to Jonathan, who's going to talk about the basics of options trading.
Thanks, Jim. So, yeah, the important thing, there's a lot of different ways to trade options, and there's some really complicated ways. And, we're going to talk about some option trading basics. So in front of you, we have a chart of the S&P 500, and it's a weekly chart. And if you can understand this chart, it basically, each one of these bars is a week's worth of trading, and this covers the span of, 1, 2, 3, 4 years. The market rallied for about 2 years. And then it's been been consolidating in the past since in 2018 it's been consolidating, and right now we had this steep sell-off into the end of 2018 and then a recovery. And so one of the first things you want to understand with options trading is you want to be in tune with the market, right? You want to be in tune with the major trend. And what's the major trend now? Well, it's kind of choppy right now, right? We were in an uptrend, and then we had a sell-off, and now we're on this rebound. And it turns out on the rebound, Jim talked about cycles. We're actually overbought on the cycles, so it would be a little bit risky right here to make a options trade that bets on like big upside. Doesn't say it can't happen, but we're a little bit spent here. I wouldn't be surprised to see some consolidation. That's what the cycle is saying. And also, if you look at the 10-week and the 40-week moving average, the S&P 500 here, you can see that the 10-week is underneath the 40-week, and that's not usually a good sign for a long-term trend. So it's possible we could roll over here. So, we wouldn't want to, so option trading basics, you want to be in tune with the market, right? We don't know if the market, we suspect the market doesn't have a lot of upside right here over the next maybe month or so. And so we wouldn't want to be betting big for upside here. Now, I'm not saying the market's going to roll over either. I'm more inclined to bet right now that the market's just going to stay in a trading range. So how do we make money in a trading range environment? So that's the first thing. So you want to be, what environment are you in? So we're in a trading range environment, and I would be leaning towards a long side bias trade that takes advantage of the time decay in options from a choppy sideways market. So we're going to look at the S&P 500 stocks, since we're looking at the S&P 500 index, and we're going to maybe find a stock that is in the S&P 500 that's in an uptrend that's outperforming the S&P 500 that we think will benefit if the S&P chops around for a month or two here. And so we don't want to get anything that's too overextended in the chart. And so these going to be mostly charts that are outperforming the S&P 500. We're going to look for that. And this is a subset of stocks in the S&P 500 that are trading over $50 a share. And I'm just going to browse through here. And this chart here shows that the price action on the weekly, and then the volume over here. And then this is the relative strength index, which shows how it's performing versus on the relative strength index. So look, maybe browse through here, and I've been doing this for a lot of years, right? I mean, I started trading 30 years ago, and so I can just browse through pretty quick here, and pick out something that I think stands a good probability of being a good trade that's going to work in a sideways choppy environment. This is the Adobe. This looks very much like the index here, right? With the 10-week crossing under the 40-week. And that's a possibility, that right there, that stock. This is a little bit extended, so I would, on a pullback in the S&P, I'd expect this to pull back quite a bit. So I wouldn't want to get into something like that. Automatic data processing is interesting. So we're just going to scan through a few here, and then we're just going to pick one. I'm not going to belabor the point. too much. Now this is interesting. Autodesk is banging against its 52-week high here, so it probably is going to retrace a little bit. And here we have AEE, a power company. So we want something with some volatility in it that's going to benefit from some time decay in the options premium. We don't want like a utility or maybe some big pharmaceutical company that doesn't have a whole lot of options premium in it. All right, so I'm going to go back up to, Adobe and maybe take a look at what we can get out of that. So let's go back to Adobe. I was on the previous page. And we're finding it right now. Okay, Adobe Systems, ADBE. Now this looks like a stock that could benefit from a choppy sideways market. I'd expect it to stay above its 200-day moving average and more than likely its 10-week moving average as well. Even if the market took a really choppy stance here, I'd expect this to stay in this 240, 260 trading range. So why don't we find a trade that benefits from the stock staying above the 240 level? And so let's look at a bull call spread for this, a deep in the money bull call spread, where we are going to make the probability based bet that this stock is going to trade above maybe the 235 level. Because if you look at this chart real closely, you can see during this 2-week consolidation period here, it stayed above the 235 level. So let's go look at, we're going to go to the IBD, Interactive Brokers, IB, Interactive Brokers, and we're going to type in the symbol. It's ADBE, and we're going to search for that. And we're going to pull up the options chain for Adobe. So here's the Adobe stock. And we're going to pull up the options chain. All right, so now we're in the options chain for Adobe. And we're going to go look, let's go, this choppy environment, we can go either 1 month or 2 months out. I'm inclined to go 1 month out. You're going to lose most of your time value within the last 30 days of an option's life. So you're going to get the biggest percentage gain from a time value decay in the last month of the option. So this expires in 26 days on March 22nd. And we want to find an option spread that benefits from the stock staying above the 240 level. So let's see, we're looking at all strikes, and we're going to scroll up a little bit here, and we want to find something where maybe we're going to do we can look at, now I'm not saying this is going to be the perfect trade in the whole wide world. We have to explore these things to see if the numbers actually work. But we're going to look at maybe the 240, 220 spread here, okay? And basically what we're going to do is we're going to go long the 220 call, and we're going to sell the 240 call. Now the 240 call is closer to where the stock price is today. It's going to have a higher time value that can decay, and the 220 is pretty deep in the money, and it's going to have a lower amount of time value to decay. So we're expecting the 240 to decay faster than the 220 in time value, and we're going to pocket that. We're going to pocket that decay, and as long as the stock closes above 240, we'll be in the money, and within 26 days, it seems like a pretty reasonable bet. So the midpoint for the 240, 220. Let's see. We're looking at. I'm going to jot this down just so that we know it. But we can do the strategy builder on this thing right here. So we're going to put in the 240, and we're going to sell the 240, and we're going to try to hit the midpoint, but we'll just put that in there. And then we're going to buy the 220, and we'll try to hit the midpoint there too. And then our strategy trader, well, if it was a trading day, this would give us the midpoint. But being that it's not a trading day, we're actually doing this on a Sunday. It's not going to show us the midpoint. But we're going to note these numbers down: 21.50, 22.90 on the 240. That's the bid and ask. And then we're going to note down the 38.40 and the 41.90 on the 220. and we're going to go to a calculator, and we're going to figure out if this is a reasonable trade, this bull call spread that we're looking at. So it's the March 22nd. So we're going to go to streetsmartoptions.com, which is our website, and we're going to go take a look at the options calculator. And now we have several different option calculators on our website. We're going to go look at the bull call spread. So let's click on that. And, it says real time, so something like that. There we go. So let's put in a portfolio size of $500,000 trading value. And we're going to have, okay, stop loss 20% is good, profit target 95%. Our stock symbol is Adobe. And we can maybe capitalize it, right? And today's date is the 24th. Now I'm going to put in the 25th because that's actually the trading day, right? So let's put in the trading day. 25th is 2019. And the expiration, this thing expires March 22nd. So let's put that in there. Okay. And the high strike is 240 and the low strike is 220. Okay. The price of the high strike option, well, we want to hit that midpoint, and the option traded between 38.40 and this is the high strike options between 21.50 and 22.90. So the midpoint of that, we can be conservative. We don't hit the exact midpoint because we're going to be selling this one, right? So, we can hit below the midpoint because we're probably not going to get the midpoint exactly on this sale. So we can be conservative. We could say the midpoint is around 22.1, let's say. So let's put that at 22.1, and we'll do the midpoint of the low strike option. And so that was bid 38.4 and ask 41.90. We're going to be buying this one. And so the midpoint for that is going to be, again, we're not going to be a little conservative. So we're just, pay more than just the midpoint. And let's say we pay 40.2 for it, right? So we'll put in 40.2. Okay. So we can see here that in the span of 22 days, this trade can make us potentially 10.5%. With a max risk on our outlay of $9,000. So, and that annualized 153%. So that's a pretty darn good trade. We can, in 22 days, make an annualized gain of 153%. So, we can go ahead and we can place that trade. Now, this is going to be a demo account that we're using in IB, but, we can place that trade, and if I can find the window at the, let's just look at the options chain again. Oh, there we are. Okay, so we can actually place this trade. Now we'd want to place a limit, right? And we want to hit that midpoint, and it's not letting me do the midpoint right now, just because the market's closed. And then we could just submit the order, and then we have a stop loss built in. Wouldn't want to risk more than 20% of our actual outlay, which is $9,000 in this case. So, going back to our options calculator, we can see, our max risk, our max loss is 900, stop loss, $1,800. So if we ended up down like maybe $2,000 in this thing, we'd want to get out, if things weren't working out for us. But there we go. In 22 days, we can make, that amount of money. And, that just gives you a taste for some options trading basics. Okay, Jim, back to you.
All right, Jonathan, thanks for that. So, folks, if you are not already in our Facebook group, you need to be there. And the reason is because we drop videos like this and information like this in our group, and we share that with you. So what you want to do is go right over to Facebook and just in your search bar, search the letters SSO. And then you should pull up the Street Smart Options group. And from that, all you need to do is go ahead and join. It's a closed group, so you'll need to request to join, but I'll get you into that group without a problem. Also, if you're on our on our YouTube account, do me a favor and consider subscribing to the account and hitting that bell icon so you don't miss any other videos like this. Jonathan and I put these on a regular basis because we really are trying to help people out. Last but not least, our website is streetsmartoptions.com. Feel free to come on over. And that calculator that Jonathan was using, that's a proprietary piece of kit that we built up for our traders to use through our program. And if you're interested in how you could get that for free, and you'd like to actually tell me a little bit about your story and where you're at right now, you can always just give us a call at 615-450-0919. That's our 24-hour free voicemail at our office. No one will answer the phone, and you'll hear a recorded free message from me about Street Smart Options. You can leave your information, and we'll reach out and contact you. And you can also set up a call for yourself if you're interested in talking to me about how Street Smart Options could help to build you and your trading ability so that we can help you out and you can work with us. And you can do that by going to our website at streetsmartoptions.com/free offer. What that'll do is that'll open up a link to the calendar. You can grab a call, and in 30 to 45 minutes, you and I can sit down and figure out how we might be able to help you out. Thanks for listening, and have a great day.